Good morning. It's 5 a.m. in New York City. I'm Matt Miller with your Bloomberg Brief. Vonnie Quinn is on assignment. Here's what you need to know. China effectively suspends additional export curbs on rare earth minerals and terminates its probe on U.S. chips. Alphabet taps Europe's debt market to fund record capital spending on AI and cloud infrastructure. And oil, the rally there losing steam as OPEC signals a pause in production hikes in the next quarter. Let's take a look at what's going on in terms of futures right now. S&P futures are up about 1/3% right now. We didn't close at a record high on Friday. We were close to it. 68.90 is the record we saw last week on the S&P, and we closed at about 68.60. NASDAQ futures right now up about 0.5% as tech stocks do better, and then Russell 2000, the small caps, are unchanged right now. Take a look at treasuries. We near a 3-week high on the 10-year yield right now, up, well, I guess a little bit less. We were up to 4.1%. The 2-year yield at 357.58 and the 30-year yield at 465.98. So we had seen yields creeping up a little bit higher. They've given up some of those gains as we get closer to the U.S. session. In terms of what we're looking at in commodities, crude right now unchanged at $60.95. We're going to be talking a lot, though, about oil, so I thought it was important to bring up the WTI quote there. And Brent almost $65 at $64.76, although holding under that. Gold holding just at $4,000, $4,003 a troy ounce this morning. Now for some stocks to watch, let's get over to Kriti Gupta in London. Kriti, good morning.
Matt, good morning. Let's start with Berkshire Hathaway reporting their earnings over the weekend. They came out with a massive profit with a little bit of caution over it. Warren Buffett saying he's not going to engage in buybacks. He's sticking to his big cash pile. But really, I think the highlight was that their insurance business was actually doing way better than expected. The analysts across Wall Street really lauding the company for it. Shares higher by 1.5% this morning. Keep an eye on those Class B shares, though. A couple of other stocks to watch here in Europe that, of course, have ADRs trading over in the States. BP is one of them. They are talking about getting rid of $1.5 billion worth of assets in the Permian Basin and Eagle Ford. This is part of a bigger divestment strategy. But here's the kicker, Matt. They're giving those assets to Sixth Street. It is very much a private transfer. Those shares higher by 0.3%. Earlier in the session, higher by almost 2%. I'm going to end with Ryanair as well, one of the major stocks that we like to watch in this part of the world. They came out with a massive profit as well. Michael O'Leary, however, issuing a little bit of caution. It seems to be, though, that's what's weighing on those shares down about 3%, Matt.
All right, we'll continue to talk about that this hour. Kriti, thanks very much for that. Later this hour, we're going to speak to Thierry Wizman of Macquarie as well. Stay tuned for that interview at 5:30. Now, the White House has announced that China is suspending additional rare earth export curbs and investigations targeting U.S. chip companies as a result of the deal that President Trump made with President Xi. Despite that move, Washington strikes a cautious tone, though, against Beijing.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Joining us now is Bloomberg's Brendan Murray, and de-risking has been the strategy for this administration, and to some extent also the Biden administration and the first Trump go-round. So how far are we going to get now? Do we have sort of a year in which to do this business before we have to renegotiate?
Yeah, exactly. I mean, I think what we're seeing is the beginning of this new phase of the U.S.-China trade relationship. We've had 5 series of negotiations between Treasury Secretary Besset, USTR Jamieson Greer, and their counterparts from China. None of those really accomplished what they wanted to, which was stability. And now, and you can hear it in Besset's comments there, this is going to be a pretty fragile situation to make sure that both sides comply with what they've agreed to. China has said it's going to let rare earth magnets flow, it's going to buy U.S. soybeans, it's going to end the investigations into U.S. tech companies. the U.S. is going to narrow its entity list that it had expanded in late September, and so we'll see how this all plays out. But it all spells a sort of a wait and see and comply and making sure that both sides keep up their end of the bargain. China could stop buying soybeans, in a fairly short period of time, and the U.S. could put its export controls back up. So it's a fairly fragile environment that we're entering.
What mechanisms do we have? You mentioned the export controls, but it does seem as though Beijing holds the cards with rare earth minerals, or to use an analogy that the Trump administration really loves.
Yeah, exactly. I mean, Besset said it over the weekend that China has cornered the market, and one of the things that we saw in this fact sheet laying out the terms of the deal from the White House over the weekend was there's really no mechanism for what happens if they don't. Besset said he thinks and he hopes China carries out its end of the bargain, but what if they don't? And I think that spells an environment where you could have escalation and de-escalation be the pattern that we continue to see, even though they've pushed this out for another year, this truce.
President Trump, by the way, in an interview over the weekend, explaining that China knows what would happen if it attacked Taiwan. It's not clear, and I'm not sure how much it matters exactly what the U.S. would do. But how important is it that the U.S. defend Taiwan for our own economic interests, Brendan?
Yeah, I mean, it's all about, apparently Taiwan didn't come up in the bilateral that Trump and Xi had last week, but obviously Taiwan is an important exporter of technology, semiconductors for the U.S. It would be a huge disruption to global trade in general if that were to happen. So we don't know. The president really didn't show his hand there about what he would do, but it's obviously one of those key touchstones of friction and potential disruption if that does eventually become part of the equation.
Brendan, thanks so much for joining us this morning. Brendan Murray is Bloomberg's global trade czar. Now let's go from trade to tech. Alphabet announcing it will be selling at least $3.5 billion worth of bonds to fund its AI expansion. Joining us is Matthew Bloxham of Bloomberg Intelligence. And Matt, as I understand it, this is a Euro bond sale. And it really pales in comparison to what we saw from Meta, from the Facebook operator last week when they came out with a $30 billion bond sale. How big a piece of the puzzle is this for Google?
Yeah, I think it's pretty trivial, to be honest. I think it's probably more in the kind of treasury management camp rather than funding. When you put it in context, I mean, Google only has about $25 billion or so of debt. I think they're looking to shift some of the exposure away from being US exposed to Euro exposed, just to balance the currencies out. And when you compare to that, they've got something like $90 billion of cash, and they're generating $65–70 billion of cash flow on an annualized basis. So they don't need this specifically to help fund their AI aspirations, but certainly in terms of good balance sheet management, it makes sense.
Are any of these companies, I use the DDIS function on the Bloomberg to look at how much debt they have outstanding. Google, as you point out, is a relatively small amount. Facebook even, or Meta, only has about $60 billion in debt outstanding. Do any of them have real debt to the extent that it would be concerning?
No, I don't think so. But, I think probably if there's anything that people will be looking at through this Alphabet raise is where they end up on the spread over mid-swaps. I think they're looking to price the near-term tranche of the 3-year tranche at about 60 basis points over mid-swap. So I think that would be the important thing to look at is, where the credit markets prices. I think historically demand has been very strong, so possibly it'll end up a bit tighter than that. But if it ends up wider than that, then that's perhaps a signal that there are some concerns out there in the debt markets about the relationship between investment and revenue.
All right, Matt, great to get in touch with you. Matthew Bloxham there from Bloomberg Intelligence talking to us about this Google sale. Let's talk about a company that has a lot more cash. Berkshire Hathaway gaining 1.5% in the pre-market after earnings over the weekend, and its cash pile soared to more than $380 billion in the third quarter. That is a fresh record for the company, perhaps for any company in global history. Joining us now is Bloomberg's Tom Metcalf. So, Tom, why does Berkshire Hathaway want to sit on this much cash, and what on earth could they do with it?
Yeah, it's always fascinating reading the tea leaves, and as you say, 380 billion, that is ginormous even for Berkshire. I mean, I think it speaks to the fact they just are happy to sit on the sidelines at the moment, just not seeing those, those monster deals that, really haven't been in Buffett's mind, for years now. And interestingly as well, they're not buying back shares, so they're selling out some of their stock holdings, but also they're not looking to buy back their shares. I think it was the 5th consecutive quarter they decided not to do that, which again builds that cash position, and of course then raises the question, how can they use it? And I think that was probably the biggest kind of feedback from some investors, at least, is look, if they're not buying back their own shares with this much cash, why should we be looking to buy those shares? So that might be why there's a bit of softness for once in the Berkshire share price.
What's out there, Tom, in terms of acquisitions? Obviously nothing at this level, unless they decided to buy like OpenAI. What could they do with that much money?
No, I mean, that is the challenge, right? And obviously with the very kind of high bar they've always taken on board, right? And, I think, Warren Buffett is probably just looking at all the market valuations right now, any of those really big kind of equity companies out there, and just not making sense for him. And that is always the challenge, over the years, his big purchases where, there was the railway companies, obviously there's insurers in Berkshire Hathaway. They could certainly eat up a big chunk of this change, but the question is, what does it bring? And I think the conclusion, from Buffett is they just don't really add too much.
Well, and you make the point that maybe he sees even his own shares as overvalued here, right? They're trading at 22, 23 times forward earnings. What would Warren Buffett have to see to buy back more of his own shares?
Yeah, exactly. I mean, I think that's one interpretation, and the one, a lot in the market are taking. And, it almost feels like, he's waiting for that, quite seismic shift perhaps in the markets, which is when, of course, he strikes. He's proven he can be very, very patient. So maybe he's just waiting for the really obvious moment again where he can kind of, step in and, make that transformative deal. Though, of course, he doesn't have too much time because he is stepping down at the end of the year.
All right, Tom, thanks so much for joining us. Bloomberg's Tom Metcalf talking to us about Berkshire Hathaway. The shares have outperformed both the New York Stock Exchange, the A-tape, and the S&P as well over the past 5 years. Let's get to the other top stories trending on the terminal this year. UK Chancellor of the Exchequer Rachel Reeves is considering possible tax increases, including an exit tax on wealthy Britons leaving the country and increased levies on expensive homes. Reeves is looking at options to simplify the tax system as well and to try and make it more progressive. President Trump threatened possible U.S. military action against Islamist militants in Nigeria if the country's government doesn't halt the group's killing of Christians. Trump said he's instructing the Pentagon to prepare for possible action and threatened an immediate cutoff of aid to Nigeria. Nigeria's dollar bonds suffered the biggest losses in emerging markets. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Ryanair is expecting to exceed its passenger growth target for the full year as demands for travel remain strong. CEO Michael O'Leary sat down with Bloomberg's Tom McKenzie earlier this morning for his outlook on airfares.
They look strong. I mean, we're moving into the winter period now, so we cut capacity, but forward bookings are about a percentage ahead of where they were this time last year. And, it looks we're growing increasingly confident that we will hold on to or recover fully that last year's 7% fare decline, that will continue through the year. Although the second half comps are a bit tougher because last year we saw a fare recovery into the second half. But we're pretty confident now that we'll keep that. We will recover fully last year's 7% decline.
OK, and on passenger numbers, so you're forecasting there's an increase from 206 million to 207 million. Is that you and the team being conservative, Michael?
No, it's actually, it reflects the fact that Boeing are doing a remarkable job over recent months of delivering us aircraft. Now, they asked us to take aircraft in August, September, October, which is is the wrong time of the year for deliveries because we can't use them. But we said we'll take them just so we secure them for summer 2026. So we have taken 23 of the 29 aircraft they left us short in the last 3 months. There's 2 more coming in November, and then the last 4 arrive in January, February next year. So we are confident now we have all 29 of those aircraft delivered well in advance of summer 26. So next year we'll grow from 207 million this year to 215, 216 million passengers next summer.
215, 216, and that is you're fully confident you get the full 29 by February of next year from Boeing.
Yeah. And the aircraft they're delivering now, much better quality. We're finding no defects in any of the aircraft. I think Kelly Ortenberg, Stephanie Pope doing a really good job. I think Boeing are really getting their act together.
And you've guided on a reasonable, you haven't given a specific number when it comes to guidance, but you've guided on reasonable profit growth.
Yeah, I think so.
What does reasonable profit growth look like?
I mean, look, if traffic is up 7%, in the first half of the year, our traffic is up, profits are up 40%, but that's distorted because we had a weak prior year comp in Easter, only half of Easter was in. So it's difficult to put a number on because it's so heavily dependent on the close-in bookings through Christmas and the New Year period. And then into the spring. So we're not willing to put a number on it now other than to say, look, traffic, we're growing faster than we thought we would. It'll be 207 million. That's about 3% traffic growth. Profit, we think there'll be a reasonable profit recovery, but I'm not going to put a number on it.
And that was Ryanair CEO Michael O'Leary with Bloomberg's Tom McKenzie. For more on Ryanair, we're joined by Bloomberg's airlines reporter Kate Duffy out of London. So, Kate, what did we see from Ryanair in terms of earnings beyond the reasonable profit growth outlook?
Yeah, so what we're seeing is a solid set of numbers, actually. They are reporting that profit after tax is up on the previous year. They've also announced this interim dividend. And more importantly, they've also lifted their passenger traffic goal. So this was something that they previously cut earlier this year and last year as well, just on the back of late Boeing deliveries. But now they're seeing a relief in those Boeing deliveries. And actually, they're earlier than expected. So that means that they can grow a bit more and add some more planes into their network and add routes and expand their network. And so that's a positive sign for Ryanair.
Yeah, the stock has done incredibly well. I mean, it's up 40% year to date. Ryanair is. It's more than doubled over the past 5 years. What was the Boeing story? Because Boeing's had real troubles delivering aircrafts, and he mentioned, Michael O'Leary did, that Kelly Ortberg he thinks is doing a great job as the incoming CEO.
Yeah, Ryanair's been one of Boeing's most outspoken vocal critics over the past year. They've really criticised Boeing over the late deliveries because it's obviously stunted the European carrier's growth network. But now we're really seeing a positive and optimistic outlook from Ryanair. They're visiting the Boeing factories over in the US, and they're seeing that Ortberg has really changed the sort of mindset at Boeing, and the factory line is really ramping up the deliveries and getting the planes out to customers on time, which is definitely making a real difference to what Ryanair can really do and the flight network around Europe.
Kate, great to catch up with you. Thanks so much for joining us. Bloomberg's Kate Duffy covers airlines for us out of London. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up, the Washington Post out with the latest poll with ABC News and Ipsos. The poll showed that Americans broadly disapprove of President Trump, with a majority saying he has gone too far in exercising his powers. 59% of respondents disapproved, while 41% approved of how the president is handling the job. Next up on the New York Times, President Trump says a war with Venezuela is unlikely, but warns that the nation's leader, Nicolas Maduro's days are numbered. The president spoke on 60 Minutes on CBS. And on the Wall Street Journal, an FDA official was sued by a Canadian pharmaceutical company, which accused him of soliciting a bribe and driving its stock down with false statements as part of a revenge campaign against a former colleague. George Tidmarsh has stepped down from the FDA on Sunday. In terms of what's going on in markets this morning, after rallying to the end of October on Friday, we're kicking off November with gains, at least on futures, up 1/3 of 1% on the S&P. The Bloomberg U.S. Dollar Index right now little changed at 12.21, and you can see the 10-year yield also very little changed at 4.0833. Coming up, Thierry Wizman of Macquarie joins us to talk about FX and rates, and there's a lot to talk about there. Stay with us for that. This is Bloomberg. It is 5:30 a.m. in New York. Good morning. I'm Matt Miller with your Bloomberg Brief. Here's what you need to know. China effectively suspends additional export curbs on rare earth minerals and terminates its probe on U.S. chip firms, as had been agreed. Alphabet taps Europe's debt market to fund record capital spending on AI and cloud infrastructure. And oil. The rally losing steam as OPEC signals a pause in production hikes next quarter. Not a lot going on in terms of the price action, but there is a lot going on in terms of decisions. Let's take a look at some of the market action here. We ended October with a gain. In fact, the S&P, 6 months of consecutive gains. It's the longest streak that we've seen in a few years, since 2021. NASDAQ futures up even higher, about 0.5% right now, as AI bullishness continues, and the Russell small caps little changed. In terms of what's going on with treasuries, we saw more movement this morning. The 10-year yield up to 4.1, and now we're looking at 4.0852. So losing some of that gain, investors selling off treasuries less than they had been earlier. In terms of commodities, as I said, not a lot of action in crude. In terms of price, $60.93, $64.79 on Brent, but we do have a lot of news to talk about out of OPEC and ADIPEC, where my colleague Jumana Versace is doing a bunch of very important interviews. Gold right now holding just under 4,000, but there. So I know we've seen a rally much above that, but this is still a relatively high level for the precious metal. In terms of stocks to watch, let's get over to Kriti Gupta. She's standing by in London. Kriti?
Good morning, Matt. Let's start off with Berkshire Hathaway reporting earnings over the weekend. Shares are higher by 1.5%. Even though Warren Buffett said, look, they're not going to engage in buybacks. They're not going to really get rid of their cash pile. And yet it's their insurance unit that seems to be driving up these gains. An unexpected surprise to the upside for a lot of Wall Street, and a lot of kudos being given this morning. Those shares higher by 1.5%. Keep an eye on those Class B shares in terms of the trading at the open. We should talk about BP as well. You were talking about the oil sector there earlier. BP actually announcing in just the last couple of hours ahead of their earnings tomorrow that they are looking to divest some of their assets in the Permian Basin and Eagle Ford to the tune of $1.5 billion. And they're doing it to a private investor, sixth straight, looking to take over those assets. And these shares were higher by almost 2% earlier in the session. Some of the wind coming out of these sales still higher by about 0.5%. I'm going to end, Matt, with Ryanair, one of the major stocks we watch on this side of the Atlantic. A profit beat, but Michael O'Leary starting to issue a little bit of a profit warning. Just 30 minutes ago, these shares were negative. Turnaround story for the airliner.
All right, Kriti, thanks very much. Kriti Gupta there with a look at some of the stocks moving in the pre-market this morning or in overseas trade. Joining us now is Thierry Wizman, global FX and rate strategist at Macquarie, and there's no shortage of things to talk about around rates. Obviously, we had a Fed meeting last week. What was your take on Jerome Powell's hawkish cut?
Well, my take is that this is a Federal Reserve that has been reluctant to cut, even though it has been cutting. And I think the reasons are pretty evident to me. One of them is that we still have sticky inflation. And I think there's a lot of acknowledgement on the part of the FOMC that it's been difficult to get inflation down, especially in view of the tariffs. The tariffs are having an effect to some extent on the CPI. The other reason is that even though we have seen, slower net job gains, there's a good case to be made for the premise that that is due to the reverse immigration, the immigration policies of the administration. So it's not clear that this is a dual mandate that needs to be addressed at this point through lower rates. And I would say another thing that's happening, of course, is that stocks are rallying and gold is rallying too. And of course, that's an indication of financial looseness, not financial tightness in the economy. I think the Fed had to respond to that by indicating that it was not a sure thing, of course, that December would see a rate cut.
You know, it's pretty interesting, though, that the market continues to price in cuts down to below 3%, just judging by the World Interest Rate Probability Screen on the Bloomberg terminal, WIRP. Go, you can see it here. Why do you think that is?
Because the market is anticipating structural changes at the Federal Reserve. It knows that the tone that is emitting from the FOMC today is not necessarily the tone that will emit 6 months from now or 9 months from now. We are going to see personnel changes. We're going to see staff change. And of course, the big one, of course, is that Jay Powell will not be around past the spring. So I think what the market is anticipating here is a Fed that is going to become structurally more dovish. What will be the justification for that? It could be implicitly or explicitly allowing inflation to run hotter than the 2% target for a long time. That could be what the market is pricing it.
So I look at, on the Bloomberg, I look at WCRS, the world currency ranker, and if you take a look at major currencies over the past month, all of them are losers against the greenback, which is weird because, we're cutting. The market expects rates at 3%, and we're spending like drunken sailors, right? There's nothing that's going to stop that. And yet, the dollar has been gaining strength. Why?
Well, let's keep in mind, even though the forward curve is inverted and seems to believe that the Fed is going to cut more going forward, other interest rates around the world are quite low. The Canadians have been cutting. The Europeans had been cutting for quite a while. So had the BOE. And of course, the Bank of Japan has been reluctant to hike. It has been moving in a more dovish direction recently, at least with regard to its rhetoric. So I think all of these things are weighing on FX, allowing the dollar to make a recovery as well. The other thing that's very important here, of course, is that a lot of the good news in the rest of the world has faded in the last few months. You have increasing concerns about debt as well in Europe, and that's evident, of course, and reflected in the political problems in France. You have a lot of uncertainty around the UK's budget and the UK's deficit, especially in view of how much uncertainty there is about how they're going to address it in the autumn budget review. And of course, with Japan, you now have a new government that is alleged to be against seeing the Bank of Japan raise rates. So all of these things have marshaled in the last few weeks and months to allow the dollar to have a bit of a rally here.
The government shutdown continues, right? What is it, November 3rd? So 34 days, and we're headed for, I guess, a record tomorrow. What do you do in your role as head of FX and rates at Macquarie when you're looking for data to guide you and nothing is coming out of the BLS?
Well, let's keep in mind here, nothing is coming from the BLS, but there's a lot of third-party sources of data for the U.S. There's the NFIB. There's the surveys that the Fed itself does. There is data coming out of other surveys as well. The Beige Book, of course, gives the Fed a good indication of what's happening nationally, and it does not depend necessarily on BLS data, but on survey and respondents from
that's an interesting point, by the way.
The Fed has data. I want to stress here that it's not as if it's running completely blind and in a fog here, even though Jay Powell has seemed to suggest that there is a lack of information. I suspect there's enough to lean on out there.
Yeah, I heard on the Fed Decides, which is our special that John and Tom do on Fed Day. Bob Michael was on there saying, they have 500 analysts at the Fed, right? They have 12 regional banks. They're talking to companies, and institutions every day, all day long. So they should have really decent data. In fact, I don't know how much better non-farm payrolls is than what they're gathering out there.
Yeah, and of course there are, even if you're speaking of non-farm payrolls, of course there are other indicators of the health of the job market besides non-farm payrolls. The consumer surveys, for example, do ask respondents about their feeling with respect to the job market. We do have ADP that collects a lot of third-party data by virtue of its role in payroll systems and payroll and payments. So there is data. I think when Jay Powell suggests that there is not enough or that they're flying somewhat in a fog here, I think what he's simply saying, of course, is that he'd like this government shutdown to end. He'd like to see a full panoply of data, of course, but it's not to say, of course, that they're running completely blind here.
Terry, what is, I'm excited to get to talk about FX because typically I anchor the 9 a.m. show and we're so focused on equities. But for years, living in Europe, WCRS was one of the main functions I was typing into the terminal. What are the currency pairs that you're most excited about? What's the action in the market that you think we need to look at?
Well, one thing that I'm mildly excited about is the Canadian dollar. I don't believe that commercial relationships between the U.S. and Canada are going to break down forever. I do believe that this is an administration that wants to ring-fence North America, that wants to put it under the commercial influence and political influence and economic influence of the U.S. And that can extend, in fact, to the whole Western Hemisphere. Ultimately, we're going to see a renegotiation of the USMCA treaty. I think it's going to work to the benefit of improved commercial relations between Canada, the U.S., and Mexico. And when you look at the long-term charts here, the Canadian dollar is undervalued, especially against the euro. So one of those pairs, or one of those crosses, if you will, that I like, over time, doesn't have to happen in the next few weeks, is I do expect euro-CAD to be lower. In other words, the euro will be depreciating relative to the Canadian dollar over time. And that's with respect to, say, a 12-month view.
All right, very cool stuff. Thanks so much for joining us. Thierry Wizman there of Macquarie Group. Let's get to some of the other top stories trending on the terminal for you this morning. Alphabet raising funds to support record capital spending on AI and cloud infrastructure with 6 euro-denominated benchmark tranches in Europe's debt market, ranging from 3 to 39 years. The total sale is expected to be at least $3.5 billion. Nigeria's dollar bonds have suffered the biggest losses in emerging markets after U.S. President Trump threatened military action in the nation if its government doesn't halt the killings of Christians by Islamist militants. That's his allegation. The notes maturing in 2047 were down the most, falling as much as 0.6 cents on the dollar before pairing the decline. And UK Chancellor of the Exchequer, Rachel Reeves, is considering possible tax increases, including an exit tax on wealthy Britons leaving the country and increased levies on expensive homes. Reeves is looking at options to simplify the tax system and make it fair. They have no exit tax if you want to give up your passport in the UK. 0%. Coming up, Beijing suspensions on rare earth curbs and U.S. chipmaker probes finally take effect. More on the importance of that next. This is Bloomberg.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Treasury Secretary Scott Besset there striking a cautious tone on China. This comes as Beijing is set to suspend additional rare earth curbs and probes targeting the U.S. chip firms, which, of course, they initiated after President Trump kicked off this latest salvo in the trade war. Joining us now is Bloomberg's Brendan Murray, who covers global trade for us. And I guess there are two important purchases here, Brendan. Rare earth minerals with which the U.S. manufacturing sector needs to survive, and soybeans, which the U.S. farming contingent needs China to buy to survive. How do those look right now?
Yeah, exactly. So these are the things that the two sides have agreed on, that China would let these rare earth magnets flow. This has been a real sticking point from the U.S.'s side for 5 straight meetings throughout the past 6 months that Treasury Secretary Besset has led. They think that after the leaders' meeting late last week that they now have an agreement that China will let those flow. These are hurting not just U.S. companies but European companies as well. And so the U.S. is coming away from those talks last week at the leadership level thinking that it's got a great deal. China also started buying soybeans again from American farmers. There are reports of U.S. wheat being purchased as well. So China, at least initially, is starting to show and make all the right noises about that it's keeping up its end of the bargain. We're only a couple of days into this, so but as you heard in Treasury Secretary Besset's comments, his cautious tone there, it's going to be very much of a trust but verify sort of relationship going forward through this next 12 months.
I mean, Brendan, these are things that we already had. You know, China was buying $13 billion worth of soybeans a year before President Trump slapped these tariffs on it. China was selling us freely rare earth minerals that we needed before President Trump slapped these additional tariffs on it. Did we get anything? Did we solve any problems that we didn't cause ourselves?
Not really. As you point out, these things should have been happening anyway. But as Secretary Besset indicated in his remarks over the weekend, that perhaps there's a relationship at the leadership level that's better now than it used to be, that will enable the two sides to get along while they de-risk their economies from each other. So you could argue that would be something that the Trump administration could say remains intact, and that was repaired over the past week or so, was that the trust between the two leaders basically is better than where it was. But as you say, we're really just back to where we should have been with goods, rare earth minerals, soybean purchases, and those kinds of things that stopped when Trump returned to the White House earlier this year. That those are now resuming, and the relationship can kind of carry on and slog along here while they de-risk, while they reduce the amount of trade. China diversifies its export markets, and the U.S. tries to become less reliant on Chinese imports itself.
Brendan, you run our global trade coverage. How important is this IEEPA case at the Supreme Court that kicks off this week?
Well, it's pretty much the whole ballgame if you're the Trump administration. You know, they came out fast with these IEEPA tariffs with the whole April 2nd Liberation Day, that this was authority that they thought the president could use kind of at will and for various reasons. We've seen him used against Brazil. We've seen him targeted at Canada for a television advertisement. So President Trump has wielded these reciprocal tariffs all over the place and for a variety of reasons. But the Supreme Court is ultimately going to hear this case on Wednesday. They will decide not on Wednesday, but maybe in the next several weeks or a couple of months whether he's allowed to use those authorities. The bottom line is he has a lot of other authorities that he could use to impose tariffs.
All right, Brendan, thanks very much. Brendan Murray there, global trade czar for Bloomberg News, coming to us out of London. Now, President Trump steps up his targeting of Venezuela. For more on the latest, Bloomberg's John Harney joins us from Washington, D.C. And John, it does look like the president said we're not necessarily going to start a war in Venezuela, which must be good news to his base, which voted him in to avoid these kinds of foreign entanglements.
That's right. He has certainly, there's certainly been a marked shift in President Trump's approach to foreign affairs after in all 3 campaigns railing against adventures overseas, military adventures, but in particular, he cited the Iraq War, for instance, as a disastrous consequence of American foreign policy. Now, though, in this new administration, which has lasted less than a year, he has taken part in the bombing of Iran. And in South America, the administration has also attacked several boats, accusing the people in them of being drug dealers or involved in the narcotics trade. And now, further, but he's been very unclear, or certainly keeping ambiguous as to what he's going to do in Venezuela. At the same time, various countries down there are divided over what he'll do and the wisdom of an American intervention.
John, I want to ask also about the Supreme Court arguments this week. It had been reported that President Trump was going to attend. It would be the first time a sitting president has done so, although on Air Force One yesterday, coming back from Mar-a-Lago, he said he likely wouldn't go. And then he said, "I don't want to call a lot of attention to me," which is really puzzling to hear from President Trump.
That's right. This case involves the owner of a relatively small enterprise. It's actually two companies that make what are known as educational toys, stuffed animals in particular, and they're made overseas. Now, and his name is Rick Woldenberg, and he had a really tough time, he says, when he had to move his operations out of China when the tariffs went up there. They went to India, and then tariffs shot up there too, so he's had to pay a great deal as a result. And he says that there's a long-standing practice, and he's correct about that, certainly, of businesses doing this sort of thing overseas because of the cheaper labor cost. Now, companies you do not see in this case are much bigger operations, which have enormous importing or enormous importers, and that includes Walmart and General Motors. They're staying out, at least for now.
All right, John, thanks so much for joining us. Bloomberg D.C. reporter John Harney talking to us about what's going on in Washington this week. Oil fluctuating as investors weigh OPEC's plan to pause its output hike next quarter. Joining us from the sidelines of the OPEC conference in Abu Dhabi is Bloomberg's Jumana Bersetchi, and there's so much going on. I know you have an incredibly full schedule, Jumana.
Yeah.
What does the oil patch look like from your point of view right now?
As you say, there's so much going on here. So many long-term conversations about perhaps the more long-term drivers of energy demand, including that coming from data centers and AI infrastructure. But more short-term, we're having a lot of conversations about that OPEC Plus decision yesterday, because they actually did surprise the market in a hawkish way. They did announce, in line with expectations, that they were going to put back another 137,000 barrels a day of oil come December, in line with the prior 2 months. But then they also said that they were going to pause putting back extra production as of the first quarter of next year. That came as a bit of a surprise to the market, and perhaps is reflective of the fact that OPEC Plus are beginning to get a little bit concerned about the supply versus demand outlook. And remember, this ties into a lot of the conversations we've been having with experts, analysts who are forecasting a significant supply glut going into the beginning of next year. So the reaction today is mildly positive, but also bear in mind, Matt, that the focus also on geopolitics and how those sanctions on those Russian companies are going to influence as well.
All right, Jumana, we're going to keep up with all the headlines you generate out of OPEC. Thanks so much for joining us. Bloomberg's Jumana Bersetchi. This is Bloomberg. Now, look ahead at what's going to go on this week. U.S. manufacturing PMI data coming in at 9:45 a.m. and 10 a.m. Eastern today. Tuesday is Election Day, with a focus on the New York City mayoral contest and gubernatorial races in New Jersey and Virginia. The BOE releases its rate decision on Thursday, and then in terms of what's going on for movers, we're looking at another day of gains, at least as indicated by futures on the S&P and the Bloomberg Dollar Index at 1221, the 10-year yield at 4.08.